Okay, the first thing, you're welcome. So what I want to do tonight, of course, I want to believe that you have seen all the videos that I
Yes,
recommended, starting from the Academy back office videos, right?
yes, sir.
And then the fair value gap video and the liquidity pool video, right?
Yes, sir.
Is that correct?
Yes, that's correct.
All right, good. So, but for reference sake, let me just go through that in a while, just like a brush up before we now go into Manara. I mean, to show you how to relate this in Manara. So the main point, what we're discussing today, is how to refine your trades, your Manara trade using the fair value gap, the change of character, which we call another name for it is market structure shifts, and then uh, and the liquidity draw or pool. So first of all, let's start with the first one. The first one is let's talk about the market structure shifts. Okay. Now
Okay.
I'm gonna be drawing that. I know you've seen this. This is like a review, at least to help you connect again, to help us connect what we want to do tonight. So this is what we call market structure shifts. So of course we know that we have two major types of directional trends, so to speak. Of course we have three, but the other one is not useful because most
Yeah.
times it's not advisable to trade,
The
which is which
ranging
one?
ranging trend
Good raging trend, which some also call consolidation. So we don't
consolidation.
think of that. Yeah. So the only two major trends we trade or we look at is either uptrend or downtrend. Now,
Yeah.
of course, there's what we call characteristics, because without the characteristics, you cannot really recognize anything in life. I mean, what makes a man is a man is the characteristics, the features of a man, isn't it? The features of a man,
Yeah.
right? And
That's right,
same
sir.
goes for the other gender, right? So that's why it's very important. Now, sometimes people recognize these things just like that. They're like, oh, uptrend anytime the market is going up. But the problem is there are some things that are needed, like a basic foundational characteristics that need to be mentioned, because that is exactly what makes you recognize it when you see it in the real market. Do you get my
Hmm.
point? Now,
That's
you
right.
can't just say when the market is on its way up. You have to say when the market is making a higher high, a higher low, a higher high. As long as the market keeps making this is called what? An uptrend.
Upward.
Higher
Yeah.
high, higher low. This is the characteristic of an uptrend. Anything outside this is nothing uptrend. You can't call it uptrend. Yeah. So long this is happening, then this is an uptrend, right?
Yes, sir.
Oh, sorry. Okay, yeah. Now, why do we call it uptrend again? Let's go back. So because the market moved from here, let's follow the arrow. Don't mind the line that is being crossed up. Started from here, from let's say low, went to high. The next turn, it went down not to another low, but this time around, this low is higher than the previous low. So we call it a higher low, right?
A higher low. Yes.
So after this, it's supposed to make a higher high. These are the things that makes it an uptrend. Why do we call it a higher high? Because it's a high that is higher than the previous high here.
The previous high. Yes.
So now the next thing, it made a high, another higher low, which is why, because it's higher than the previous higher low, it goes on like that, higher high, higher low, higher high, higher low. So long it goes this way, it's still called uptrend. Now, the moment the next low that's supposed to stop here, so long is anything above the previous low, or if at all, even if it's still at the same level as the previous low, you can still call it uptrend, so long it keeps moving up. But anything that makes the next move to be lower than the previous low, it has changed a name. Remember,
Hmm.
all the while we've been giving it higher high, higher low. But the moment the new low is now lower than the previous low, it's no more higher low. That
Yes.
means characteristics have changed. That means the
Yes.
character have changed. That's why I call it change of character.
Change of
Why is it change
character.
of character? Because now that we have a lower low, because this we call it lower low, because why? It's now lower than the previous low. So when you
Yes.
have something like this, here at this point is where you have your change of character.
Character.
Because this was the last low. The last low was here. Now it's been taken over by this line that came across it downwards. So this change
Hmm.
of character. Now, the moment you have a change of character, 90% of the time, this always stipulates a change of trend, a reversal, because every trend has its characteristics. So for an uptrend, we have a higher high, higher low. But for a downtrend, it's different. It's called, we always have what? A lower low, lower high. Lower low, lower high. Now,
Right.
this thing is giving you a lower low, which means it's reversing. Do you get my point?
Sure.
So this place is what we call change of character
Character.
or market structure shifts. Why do we call
Shift.
it market structure shifts? Because uptrend, downtrend are referred to as market
Market
structures.
structure.
That's
Yes.
another name for the trends. They are all called market structure. So when we see market structure shift, it means the market structure is changing its direction,
Mm-hmm.
and it's changing it at this point here, which we have change of character. Or you call it um let me do it this way. So this is what they usually use. You see, oh, okay, sorry. Let me put this here. This is what they usually use. Chalk. Whenever you see chalk or MSS, okay, let me just chalk or market structure
Structure shift.
structure shift, which we call MSS. This is what they mean. That is what you have here. Okay,
Yes.
that is what you have here. Now, that being said, sorry, let me change the phone here. Oh, that's the lowest. But yeah, yeah, bottom is good. Left, center. All right, so this is what we have here. Okay, change of character. Which means this means the market is about to go down. The moment you see this, you don't buy. You look for a sell. And how do you look for a sell? This is what usually happens. This long move you see here. I hope you're following, right? This
Yes.
long move you see here, this long move that came here that broke this line, this one that you see here. Hmm?
Mm-hmm. Yeah.
In between this long move, there must be a fair value gap, which I
Gap.
assume you have watched. You
Mm-hmm.
know, there must be a fair value gap. Now you always
Yes.
look for a fair value gap that is close to this area where the break happened. Okay, so either
Yes.
the one that is above it but close to it, or the one that is around it, or mostly the one that is good is from this area upward. Now, whenever you see that, that becomes your entry. You make your entry at that point. That's where you
Okay.
put your entry at that point, because after this happens, after a break of structure happens, sorry, a market structure happens. You understand? Sorry, a market structure
Change of
shift
character.
happens,
Mm.
or change of
Yeah.
character. It must have what we call a reversal, like this. I'll clean this. I just want to show you. So it's always reverse backwards to tap into a fair value gap around there before now
Yeah.
making it lower low, lower high, lower low. Do you get my point?
Yes.
So
More like retesting.
retesting, thank you. To come there to retest around this area. So
Yeah.
the market will go back here. This is where you make your entry, and then
And
it's now
target
give
the
you a
fair value
lower
gap.
low,
Okay.
lower high, lower low, which is a downtrend now. You see the difference?
Yes,
Opposite
sir.
of this side, right?
Mm. Yes.
So this is a correlation between the market structure shifts, the fair value gap. Okay, those
Yes,
are the
sir.
two correlations that we first thing we want to talk about. Now, when we talk about when we use the same example for an uptrend, it's just like it's the same but just opposite, right? It's the same but opposites.
Mm-hmm.
So meaning if you have this for let's do another example for an uptrend. Hopefully, I hope the rest must have joined also. They will understand what we're doing. I mean, that's what's supposed to be, anyways. All right. So we have this was an uptrend which reversed to become a downtrend. So let's look at the downtrend now. Now a downtrend will start from a high to a low to a another low
Lower
to a
high
lower low to a
to lower
lower
low
high,
to lower
lower
high.
low to a lower high and a lower low. like that, right? And a
Yes.
lower high.
Uh,
Now, if you look at the difference between these, is it starts with a high to a
uh-huh.
low. Now, a lower high. Why is it called a lower high? It's called a lower high because this was
Because
a low.
uh-huh.
Then this low came high, right?
Yes.
Just to form another lower low, which was a low that is lower to the previous low.
Lower than the
Then
previous one.
yes. So remember, all these areas are called highs. Why these
Yes.
areas are called the lows? But the question now is, what kind of high, what kind of low do we have? We have the lower low here because why? It's a low that is lower than the previous one. And then we have the lower highs because the high is lower than the previous one, right?
Uh-huh. Yes.
Look at this high now. This new high here is lower than the previous high, right?
Yes. Yes, that's right.
It goes on like that. The same thing here. Look at this low. This low is lower than the previous low. This low is lower than this previous low. This low is lower than this previous low, which is opposite of what we have here, right?
That's right.
So that is the characteristic of a downtrend. But
Downtrend, yeah.
what now happened? The moment
When
there's a
it now
market structure,
makes,
you
yeah.
see what?
I say the market structure shift happens when instead of a lower high now, we
Look
now
like
have a
this.
higher, yeah,
Instead
a
of a
higher
lower
high.
low now, you now have
Yeah.
a higher high, which is higher than the previous low. So you see what
Yes.
happens now? So let's go
Yeah.
one more. This is a lower low now. Now, instead of going down, what happens?
It now
It
goes
goes
higher than the previous high.
higher than the previous higher. Now went up. This is what they call market shift for a low for a
A
downtrend.
downtrend. Yes.
You get
Yes.
so, which means the same thing as we did here. The market shift happened where here because we're supposed to have a lower low, not a,
Not
we're supposed to have a lower low, not
a
a
lower high.
higher, not a higher high.
Yeah.
Because it's no more a low now, it's a higher high because it was high. This is higher than the previous high. It's supposed to be lower than the
Mm.
previous, right? But it's now higher. So
Yes.
this was the break. So what do you expect after this? Normally, what you now expect is you make your fair value gap should be around
Fair
here,
value gap.
around
Yeah.
this area. So you will make your entry around here. Anywhere from here downwards, your entry will be there.
Yeah.
The market will come back and retest and then make a higher high, a higher low, higher high, higher low, which change the trend and turn it to an uptrend. Do you get the point?
Yeah, sure.
So that is the correlation. Now, remember, normally you are supposed to have watched this video. This is just like a refresher and a connection,
Mm.
right?
Mm.
Now, the only
That's right.
thing we've not spoken about here now is the liquidity. The liquidity. Now, so let's talk about liquidity. Now, you've seen the liquidity already. You've watched the videos, but I'll just give you, I mean, what do we really mean by liquidity in a simple form? So that will be easy for you. Anytime you see it, you will know. Now, liquidity are just areas where there are a lot of money that are being deposited. How? Because in the market, every movement, let me tell you this today, every movement is towards a liquidity. Anytime you see a market moving from point A to point B, it's either they are being attracted or magnetized by liquidity or they are magnetized by fair value gap. Do you get the point?
That's right.
So now, this liquidity, where are they located? They are located at the extreme end of every market. When I say extreme end of every market, the high and the
The
low.
highs and the lows. Mm-hmm.
Good. So like when you have here now, when you have here, um, like here now, all these areas on top, like when the market makes this low, okay, this low here
Mm. Yeah.
is already a liquidity because that was where the market stopped. Anywhere the market stopped, there must be deposition of money. It moved a
Mm-hmm.
lower high, another liquidity, like that, like that. So
Yes.
sometimes, depending on the longer or the time frame, all these can be called liquidity. But there are three types of liquidity. Let me go straight to the point to make it easy. Or no, should I say three types or different? Let's look at all the types of liquidity that we have, major ones. Now we have let's start with we have the highs and lows type of liquidity, which is the one we have here. Sometimes the market will go this way, 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 go this way. Now, as it's going this way, they call this one trend line type of liquidity. You understand? Because you
Yes.
know why? All these areas here, all these areas, all these areas you see here, all this top here, our money being deposited at the top here, top money, and it's not been taken yet. You get the point?
Yes,
But
sir.
the ones down here have been taken. All the down ones they have been taken. Why? Because if you look at it, let's say this is money being deposited. The only time this money will be taken is when the market passes through it, isn't it?
Okay.
So this market went this way and then came down. The moment they come down like this, they've taken this money.
Okay.
So they went up again, took this one, took this one. So the only one that has not been taken are the one at the top. So
Okay.
most times when you have this kind of thing, you get to a point, the market will make a reversal from here and go up like this. Do you get to take all this liquidity, make a pullback and take all this liquidity and go up like this, just to go down, further down again. Do you get my point?
Okay.
Yeah, I'll show you. Don't worry, I'll show you an example of those things. I don't want to spend much time on this because I assume you guys have watched the video. So the video will be short because I'm recording, right? So look at
Yeah.
this. This one will be taken out. All of them will be taken out like this. When they are taken out up until this level, they've taken out. So now the market will gather all this money here to have enough energy to go further down. Do you get my point?
Yes.
That is it. So this happens between a high time frame and a low time frame and all that. Okay, that's the first type of liquidity. This one is like a trend line liquidity. So this one may be a bit technical for most beginners to understand, but the other one that is so simple to understand is the outer, like we call them external liquidity. What are external liquidity? Sometimes you see the market goes high like this, and then come like this, and then go like this later in future, and then come like this. It could go like 3 times to touch the same area. Now, when you have something like this coming, they call them equal highs
Equal
because
highs.
you have one here, one here. Now, this equal highs becomes the liquidity. So, for everybody who is trading now, anytime you are trading, you'll be looking forward to markets to come all the way from here, all the way from here. Where's my tool again? Okay, we are expecting the market to come in the future all the way from here to come to take out all of this one, to take out all this one here, these two, all the money that is deposited. So you come here to take it out. And when that taking out is up, when it happens, most times is to take it out so it can come way down to go further down.
Mhm.
Do you get my point?
Yes.
And when it's coming further down, see this area now, these 2 points, this point here, there are another liquidity that will be taken. Do you get? So
Yes.
sometimes take this one also and make its way higher. Do you see it?
Yeah.
So let me prove this thing to you guys via the chat so you understand. Let's go and look at the chart. Now, this is a real chart, right? This is a USD JPY. Now, let's look at this. This 15 minutes time frame. Okay. If you look at this one in the past, let me make it this way so you can see it. So if you all focus on this point in the past, let's use this pen. Here, the market came down here. Let me use another color so it can be, let me use red. Sorry, let me delete this first. And then use red. And let me make it a bit thicker. Look at the first touch here, the second touch, the other touch. All of these things are liquidity deposited because small time traders that trade with support and resistance, they have a rule which is normal for basic traders, and that's their principle. The principle is whenever there will be 3 touches on a particular area, that area is area of resistance. So they'll go and stay there and wait for that market to come there to take another sell from this area. Do you get the point?
Mhm. Yeah.
And they'll put their stop loss around here, right? Now, this stop loss means money. Somebody who is trading with $1,000 now will put the stop loss there, which means if this trade goes against him, $1,000 is gone. Somebody who's trading with $100, $200, $300, $10,000 all over the world. Do you know how much trillions of dollars that have been deposited here? That's what they call it liquidity. So all this money that has been deposited here as stop losses is what these guys target, the big guys. Do you get? So what
Yes.
do they do? In the Future, what you do is you see what happened just here. Let me show you now.
Yeah.
So imagine you are one of those that probably targeting this place for um let me delete this, targeting this area for a sale, right? So what happened? The
Mhm.
market came there and made you believe that, oh, it's coming actually to sell, right? And what
Yeah.
happened?
It goes all the way, sweeps the
It's
liquidity.
all liquidity and now made their own low. Do you get the point now?
That's
Which
right.
this low now is coming down to where now? It will come down to as low as probably here when the market opens on Monday or Tuesday to take out this liquidity, or it will come as low as this one to take out this liquidity, which would have benefited these people. But the
Yeah.
problem is they first took their stop losses, so their money is gone already, so they won't be there when this will happen. But we don't
Yes.
care about that. What we want to know is we need to know where their liquidity. But it will become easier for you with Manara. I mean, especially for those of you who have not really watched those videos. You'll be like, how will I know this now? It's complicated. That's why you have Manara. Now, normally, if you're your own trader by yourself, you'll be the one worried about yourself about all these ones. But with Manara, all you need to do is I'll just show you how to locate these things and how to avoid them. So it will tap your loss, your stop losses. Do you get it now?
Yes.
So what is the correlation of these three things that I'm trying to show you? Number one, if you check on our Manara settings, let's go to Manara now. Let's go to Manara. On our Manara settings, it is already glaring there that we only trade, what do you call it? Reversal, right?
Yes.
Trade reversal is on the settings. For those of you who know about the settings, let's look at the settings. I think it's under the settings. Eh? Yeah, the settings on the is this monitor? Yeah, monitor. Yeah, it's supposed to be sorry under the settings. Settings. Um, oh, wait. Okay. Yeah, I think it's here. Aha, look at the D points. With C means continuation. D is reversal. Do you get?
Okay.
So
Yes.
yeah. So Manara trade, if you look at the trade ideas, even when we go to monitor, let's go and look at trades that are successful. For like let me slant it this way. Let's slant it. Incomplete trade. Okay, let's go to complete. Oh, sorry. Let's go to complete setup. So you see that Manara is designed. In fact, as a matter of fact, what I want to show you, you can even see it here too. So we don't need to do all that incomplete or complete. Let me see it now. Victor, is that from your end?
No.
Please, the person should help us mute. So now let's look at USDCHF, for example. You see that what is this pattern saying? That there's going to be a sell, but for that sell to happen, this market have to go from here, have to go from here on its way up, get to this place, and then reverses. So we trade reversal. That's why you see the D point. C here is continuous. If our entry point is here, it means we are trading continuous. But D is what we are trading, which is reversal. Do you understand that? Do you understand? Hello?
I understand, sir.
All right.
Yes,
So
we
we
understand, sir.
good. So every trade of Manara must always, if it's a, for example, okay, this is a sell, right? So in the sell scenario now, what do we expect? The market will buy first before it sells. So which means the Manara only give you sales when the market is on its way up. You see that that's like opposite. Manara will tell you sell when the market is on its way up. Manara expect that when the market gets to this point, which is your entry point, it should reverse. So we are trading the reversal. Now, if you look at the buy to USD card, what does it show you? USD card buy will always be at the bottom, which is also what? The reversal. Now look at it. So what do you see? Same thing. The market expects, the market says buy, but the market is on its way down. Buy is supposed to be up, right? So if it was
Yes.
continuous, CC here, let us see. If the market says buy, it means market expects us to buy from here and then it continues going up. But market say buy, well, we are targeting point D, which is reversal. It means point D is actually downwards. Buy means upwards. So Manara is saying that the market should come down first to D, then now reverses back up from D. Do you get the point now? That's why we trade reversal. That's what the D and C thing means when you see it on your settings. Now, the area of settings, of course, I believe all of us know the right settings and all that. Now, let's now look. What we want to bring in now is how to now trade Manara using all this information of the liquidity, the market structure shift, and the fair value gap. But before that, these, of course, are things we have taught before, but I'd just like to go over it again. Before you take any trade, because you know why I'm going over this? One of us actually asked me a question. So she took odd CHF, like odd chef, AUD CHF. So she took it in the after, like let's say West African time, or let's use London time. So to make it easier, so London time, at least all of us know that depending if you're in the West, you know that London is mostly +1. And then if you are maybe from the East, I think London is like +3 for you also. So that's East Africa. So now around that time, in the afternoon, let's say around 10 o'clock in the morning, let's use it at 10 o'clock in the morning, someone taking AED CHF. I mean, you don't expect to make much because that time the market will be slow. You know why? If you go back to check, what does this ADCHF mean? Australian dollars, right?
Mm-hmm.
Versus Swiss francs. Both of these currencies are only traded around New Zealand area. New Zealand their time zone does not correlate with London at all. As a matter of fact, in their own daytimes, our own night time. Like right now, if you're going to be checking New Zealand time right now, let's check New Zealand, or let's check Australia, whatever Australia. No, I think I'll have to check the cities there. Sydney, where's Sydney? Sydney is Australia, right?
Yes.
All right, look at Sydney. Imagine +10. So what does that mean? That means right now that we are 9:32, these guys should be around AM, their own AM. See it around 9 their own time or so, or 10, I don't know, but around that time. So look at the gap is far. So which means their own now every currency you want to trade. Remember the word 9 to 5. 9 to 5 is a common word everywhere in the world. 9 to 5 is for employees, it's for business hour. We call it business hour. That is when people do their businesses, right? So 9 a.m. in Sydney is not around around 9 a.m. It's actually our night, like 11 p.m. or 10 p.m., like as we are now. So which means if you have to trade Sydney pairs or anything close to New Zealand, because all these guys are in the same area, you have to trade them around that time. Now, if you trade them at around 10 a.m., that means they are sleeping then. Yes, the currency will still be moving in the market, but not with enough volatility. So that person was complaining that the trade took so much time with little profit, so slowly and then went to stop loss. Yes, misbehavior will happen when there's no volatility. Volatility means when there's no influx of businesses transacted with a particular currency. It is boring. That's why I always tell you guys, one of the rules of trading Manara, always trade pairs that fit into your session. So for those of us in Africa now, most times, I mean, we're just like 2 hours, 3 hours, not even 3 hours, I think 2 hours plus one plus this, whatever. Okay, like difference. So which means we must trade alongside London and US. Why? Because if you look at it now, let me show you something again, using the time. I mean, I'm making it easy for us. So even for those of us who don't know how to check trading sessions, just remember 9 to 5. Before you take any pair, check 9 to 5. And then if you have global clock on your phone, that app, you can even download it if it doesn't come with your phone. Like this came with the phone anyways. So you can just go there and check, okay, if I'm trading USD JPY, fine. This pair, at least one of them must be around the time I want to trade. So let's say you are trading around 1 p.m. Nigerian time, which is +1 UK time or London time, whatever. So if you're trading USD is either New York is in session or Japanese is in session. So first of all, you want to ask yourself, Japan. Someone should give me one city in Japan. I think Ottawa. Is it in Japan? All right.
Ottawa, no, no,
Okay. Ottawa is in the US. Sorry.
in Canada.
Ottawa is in Canada. Sorry, forgive me. Japan. Give me one city in Japan.
Uh,
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 Tokyo. Is Tokyo in Japan?
Tokyo,
Tokyo,
Okay,
yeah.
Tokyo. Good. So you check Tokyo time. Now,
Osaka.
Oh, Osaka, good. Osaka
Osaka, yeah.
too. Yeah, Osaka, you're right. Yeah, Osaka. So see, so it's Tokyo, Osaka, they're right. Yeah, you're right. Plus 9 hours. So imagine if I'm to trade USD JPY around 1 p.m. or less around 2 p.m. Nigerian time, which is 5 p.m. Sorry, 2 p.m. Nigerian time. That is 3 p.m. No, 2 plus 2. That's 4 p.m. East African time. Okay, that's where you want to trade. Let's say you want to trade around that time now, and you want to trade USD JPY. Okay, now you check plus 9 hours. Whatever you want to do, you must add 9 hours to that. If you are trading JPY, for example, let's say you're looking at JPY, if you add 9 hours to that, uh, uh, 2 p.m. Nigerian time, for example, which is 4 p.m. Eastern time. So that's Eastern African time. So when you add that, you see that that would be like falling to like 11 p.m. Do you get?
Yeah.
Falling to 11 p.m., which means all you do is, sorry, I'm making a mistake here. You subtract. That's what you do. You subtract. So which means, or even if you add, sorry, you add is okay. So that means 11 p.m. in Japan. Now, 11 p.m. I mean, who works around 11 p.m.? The job is called 9 to 5. That is not their own 9 to 5. That is 11 p.m. They are sleeping. So Japanese yen will not be moving very fast. So it's not good for you to trade. But then if it's USD JPY, because there is USD among, so now you check USD. So when you want to check USD, you check New York to know if the time is okay with. So New York is +4. Is that +4? -4. Is that it? Yeah, this is minus
Minus
four.
four.
Good. So what does that mean? That means 2 p.m. your time is -4 hours. So -4 hours is like 2 to 1 to 12 to 11. Let's say, sorry, 2, 1, 2, that's 10 a.m. If I'm right, 10 a.m. in the United States, which is a peak hour for them. Peak hour because after they open the business for 8 to 9, business is already running around 10 a.m. So you can trade USJPY at 2 p.m. your time because the USD is still open for business. But when you choose two pairs that none of them is opening around your time is a problem. So what is the logic around this whole thing? So instead of you giving yourself the technical of trying to know different sessions, just have this time difference or whatever what do you call it? This what does it called? This time app on your phone. And whenever you want to trade any pair from Manara, Manara gives you any pair. Let's say Manara gives you USD card. You want to ask yourself USD card, that is United States dollar versus Canadian dollar. Now USD and Canadian, especially New York and Canadian time is always almost the same time using the major cities. So which means you can trade USD card around your own time in the afternoon. You can trade USD CHF so long USD is there, but you cannot trade USD. You cannot trade AUD CHF. You can still trade Euro CHF because that's UK time. Euro is UK time. You know. So all I'm saying in essence is whenever you get a lot from uh, um, Manara, the first criteria is to check the pair you are trading and checking if does is any one of them going with the time you want to trade them because you need a trade that is fast and will give you result on time at least, and then you'll be out of the market in no time. Right. That is first thing. Second thing, which all these things are things we've talked about before in the past. Second thing is you want to trade along with the trend. So if they give you a trade like this, USD CHF, for example, I don't like USD CHF. For me, I trade only GBP. I mean, I trade NAS 100, GBP USD, SPX 500, or Euro USD. Even GBP, I don't like trading it, but it's the last option. If I don't see anything at all, then I'll consider that. So let me just say I see, let me look for Euro, but it doesn't matter. I mean, what matters is let's just do this trading. So let's say we have a Euro chef. Manara I say you should sell Euro chef. And what time frame? 5 minutes. Let's use 15 minutes. Now let's say Manara say you should sell Euro chef at what time frame? 15 minutes. Right? Look at it, 15 minutes. Manara say you should sell, though he's already moving. He's already step into the entry and he's already moving. But now Manara say she sells this trade, this pair 15 minutes time frame. It's also good. The first thing you do again is, I mean, by now, I believe everyone should know how to use your trading view. It's part of the training on your back office. So you come to trading view, but if you are using a system for your Manara, I mean, you could do everything on your system. I mean, you don't have to come to trading view. Okay, you don't have to come to trading view if you are using your system because you have enough view. It's bigger enough. So you come to your system, or better still, let me make it easy. So if like for those who don't know how to use trading view, but that's the best actually. But let's just use Manara. Okay, you can slant your phone if you're using a phone like this. Slant your phone. You want to check the trend because you want to check the trends. Okay, you want to check the trend. Is it a downtrend or an uptrend? Now, as you can see this, what is it giving us? It's giving us a lower low, lower high, lower
Yeah.
low, lower high, which is characteristic of what?
Downtrend.
Downtrend. So this is a good trade for itself.
Yes.
It's a good trade for itself, right? So these are passes. So the first thing is the session, the time you want to trade. So if that matches, the next one is now the trend. You have that. Good. The next thing. Now, this is basically this pattern or this strategy is basically it is based on demand, supply, or what we call it seasonal candle, which I've trained you guys about that before, right? Now, all that being said is the reason why you still have to go to trading view. So we'll go to trading view now. Let's just go to trading view and look at this 15 minutes to give you a wider view and you understand better. So we're looking for Euro CHF, that's Euro CHF. Euro CHF. This is Euro CHF. Euro CHF. Okay. And we're looking at 15 minutes. So Manara says entry is at 95.32. So come to the tool area. For me, you take a horizontal line, 0 points, come to coordinates. That's the coordinate area, sorry. 95, what is it again? 95.32.
95.32.
95.32.
95.32.
Yeah, thank you. So this becomes your entry, right? You see, that is actually a downtrend. Can you see the chart now? It's downtrend, right? So it's a good trade. Now it's a downtrend. Okay, you come to this this is Manara's entry, right? So I'll put it at entry point. Let me just use okay, it's okay. This is my color, so I'll use blue for the entry points. I'll use gray for the entry point. Use gray for the entry point. I'll use this light blue. Now this is the entry point for Manara. Stop loss is where? Stop loss is 95.35 according to Manara, right?
Yes.
Is Rita online?
Yes.
Okay.
Yes, I am, sir.
All right, good. You're welcome. 95.35. Oh, I'm spot on, I think. 95.35. 95.35. 95.35. Okay, that's the stop loss. And the target is so I go for TP2. For me, I always go for TP2. As a matter of fact, I'll tell you something later, or I'll just tell you now. Remember I was talking about liquidity. So one of the things
Yes.
again is for me, I always put my take profits around liquidity area, my entry around liquidity area, because like I told you, market moves from liquidity to liquidity or from fair value gap to liquidity. But either way, it's always looking for liquidity. Okay. Now, if you want to be sure, you don't want to be in a trade whereby you'll be in profit, then later on it will reverse on you. You have to go always target the next liquidity. Know that market must get to that area because for the market to even reverse, it needs to go and take money from that end to move around. Just like I need to get my transport fare to go to where I'm going. So you know that this person must come to this area. You go and wait for that person at the area is getting a steep fare. You know. So if you look at this now, based on what I explained to you guys, let's go to the other charts. So let's say the TP2 is 95.23. When I'm taking Manara, I always go for TP2. I mean, when I'm taking the short time for like 5 minutes, 15 minutes, at least sometimes even 1 hour, so long as around the liquidity. So 95.23, right?
It's 523, yeah.
95.23. Let me use deep blue here. Coordinates 95.23. Oh, I'm almost spot on. Now look at it. I think that's the TP2, right? Yeah. But if you see, the C area is lower than that. The C is around 95.22 area. 95.22 area. The C of the chart, the chart has X, A, B, C, D, right? This is what I'm talking about, right? The C is around here, 95.21 area. All right. Now let's look at this. based on what we have learned about liquidity, okay, about liquidity, first thing to note. Now, Manara gave this trade and said, because it's already a downtrend, so we know it's going to be making what? A lower low, lower high. Let's look at it. Let's look at it. The characteristics. I'll use the pen. I'll delete it. So start coming from above, but let's just start from here. See, it makes a low here, it makes a lower high, a lower low, lower high, lower low, lower high. Do you get the idea now? So it came down here. So we're expecting it to keep coming to a lower low, right? Either way, it's giving us a downtrend vibe. So Manara gave this entry. Look at the entry point for Manara now. This line here, which is 95.32,
35.
right? 95, no, 95.32.
32, yeah.
Yeah, 95.32. Let me bring the shorts to. So this is what Manara expects. Guys, don't mind my color. Or your own, it should be red and green, but I prefer, I just like to make my things calm. I don't like sharp colors. It distorts my vision. I don't like it at all. So I chose all these colors. So this light blue is the profit area, while this one is the stop loss area. So now, Manara expect this market to come to this place and then come down. Why did Manara expect that? Why did Manara expect that? Because if you look at the previous area, you see this area here, the market has been here before, and there's what? There's a IC candle here. For those of you, at least you have watched that video, you would have learned about IC candle, institutional candle. That's a candle whereby you see a smaller candle being taken over by an opposite bigger candle, okay, and going the other direction. So it has happened. So I expect that it will come here and happen there. So you now that you want to take this trade, let's say, I mean, you've seen this trade, you want to take it. So when do you enter this trade? When do you enter this trade? Now, first of all, you know that there is what we call liquidity around there. Can you see the liquidity here? There's also
Yes.
liquidity here. There's also liquidity here. Do you see it now?
Yeah.
Yes.
Aha. Now, so you want the market to come take any one of these out. Now, whenever it's been taken out, so meaning you now, you will not enter the trade immediately. That's why we do matures. So whenever I get to the entry, like as I got to the entry now, what do? The next thing is you go to a smaller time frame. 15 minutes, you can come back to 1 minute. Do you get, guys?
Yeah.
To come back to 1 minute. Now that you come back to 1 minute, see what has happened now. What you are looking for, the first thing you are looking for is a reversal. Is a reversal. What is a reversal? Change of character. Because if this market was on its way up before, giving you, look at what the market is giving you here. Market has been giving you, see, it's giving you, let's start from here.
A moment, please. Jay, you need to mute your mic, please.
All right. Can you see it, guys?
Yes.
From low to high to a low, which is a higher low, to a higher high, to a higher low, to a higher high, to a higher low, to a higher high, to a higher low, to a higher high. And then what do you expect here? You expect it to give a lower low, right? And then, and then give a higher high, right? But now it got to this point, which is high, and came on over to the last low, which was this low. This place here is the last low before it went high. Now it has overtaken this place like this. What is that? According to what we just explained.
Change of character.
Change of character.
Change of character. Good. Now we have seen change of character. What did I say you should look out for after the change of character?
Fair value gap. Fair value gap within the last line that broke the character.
Within this last line here, within this line here. Can you see any fair value gap here based on what you have studied?
Yes.
Let's look at them. We have here, you have fair value gap here because there's a gap between, you count the first, you can't always count 3 candles. 1, 2, and third candle here. So between this the first candle and the third candle, there's a gap between them. Here to this place. So you're gonna put, there's a gap here. That's the one fair value gap.
Mm-hmm.
Then another one, I mean, because it's still within the line of the where the breakage, where the what's called happen, right?
Yeah.
You have another
Yeah.
one here,
Yes, between the second candle and the
second
fourth
candle.
candle. Yeah.
So you see, now the market, we expected the market to reverse. What have I done? Okay, we expected the market to reverse to either of this one, either it reverse to this one or this one. Now, in order to help you out, okay, guys, in order to help you out, to know, okay, which one are you going to stick with? Okay, which one are you going to stick with? Now, though, for me, let me tell you, for me, I would still have preferred the market coming to take this liquidity here. So there's tendency that, it could come here to take the liquidity, which is still within the range, right? But
Mm-hmm.
since the market has started moving and it has given you these shifts, it means the market is ready to keep on moving downwards. And I know I've done something wrong here. Okay, I shifted this thing. So it means the market is just about to keep moving down. So what you do is you take an entry around there or here. Now, how do you now know where to take an entry? How do you now know where to take an entry? I believe in one of those videos, you guys saw what they call Fibonacci, right? Fibonacci 2.
Yeah. 50% below Fibonacci.
50%. Good. So you now do this. So now, if you are using the Fibonacci, if it's a downward trend, I mean, you are targeting a sell, you expect the market is going down, your Fibonacci will start from top down. But if you are targeting a buy, the Fibonacci will go from down up. So this one now, you want to take it from the beginning of this candle, or this, where the whole thing started from, till where it is right now.
Yeah.
When you do that, you will now extend. You look for the 50%. Now, why are you looking for 50%? I don't want to go deep, so you guys will not be. I mean, this is advanced. I want to almost go into an advanced class now. So there's what we call in anything in trading. There's what we call the premium area, the discount area. Premium area means areas where that's at the top area. These are areas where you can look for sell. And why discount area is where you can look for buy. Because when you are buying, you should buy low from low area. When you are selling, you sell from a high area. So premium and discount is measured using Fibonacci 2. It tells you, oh, it will divide the move. We call it the move, the impulse, from the beginning of the impulse to the down to the end of the impulse, which one we have here now. Okay, divide into two. So the one at the top is areas for sell. The one at the bottom is area for buy. So the best area to look for now, where you choose now, you have two fair value gap. One is area of discount, the other one is area of what? A premium. Discount is down, premium is down. So you take the one at the top, you take the one above 50%. So now what do you do? What do you now do? Your own entry will now be here. You come and put your own entry here for this market. Where is my short move? The short two. You take your own entry here around this middle of this Fibonacci. Sorry, fair value gap. Okay, and you target. For me, I always target the next liquidity. Now, where will you put your stop loss? Let your stop loss be above this one. Okay, above this move, a little bit above this move. Do you get?
Yes.
Now, and your TP will be, you see this area here, this last area here, the closest liquidity. You always look for the closest liquidity. So if you look at this point here, let me mark it out for you guys. This point here,
Yeah,
where the market came here before going up, yeah, that is the closest liquidity. So it's even where Manara put as a CP is a good place, but the market usually will get to places like that. We get to the next liquidity because market only move from liquidity to liquidity.
liquidity.
Remember, it's a downtrend. So you can put
Yes.
your own TP here. The good thing about this whole thing is this. It will give you a very good risk to reward also. If you look at this price now, look at this. When I tap this thing, it tells you that the stop loss is two pips. Can you see it? Let me point it out for you guys.
Yeah.
See the stop loss here is 2. Can you see number 2, 2.0?
Yeah. Yeah.
That's your stop loss. Your TP is 8.3 pips. If when you divide this, that will give you 4.15. That's so the ratio of your risk is 2%. while your win is 8%.
Mm.
You get the point?
That's right.
8.2%, so to speak. So it means 4 times whatever you are going to be risking. So if you're risking $10, $5, whatever you make here will be like $20. Or just multiply whatever you are using as your risk times this number. Now, the question now is this: does this give you 100% guarantee that you win this trade? The answer is no. There's nothing like 100% guarantee in everything in life, including whether we will live through the night. That's why we pray to God and we say thank God in the morning, isn't it? When we are
Yeah.
alive. But this gives you higher chance, like 70%, which is a very big one, like 80%. Do you get? So,
Yes.
and I'll prove it to us tonight. We'll go and check all the winning trades. Okay. We'll apply the same thing and see whether it follows or it respects them or not. Remember, we can't get 100%, but we'll get like almost over 70%. So, which means I'm saying that if we look at 10 trades that have been successful in the past, you see that at least 7 out of those 10, you understand, respect this old strategy. You get the
Mm.
point. And if we look at the
Mm.
ones that have been lost in the past, so at least 7 out of them still miss the old rules. You understand? So that's what
That's
I'll do now. You get my point?
okay, sir.
All right. So now another thing I want to ask you. This is like sure. Like I said, someone says sure that this market will go here, catch your entry, and then now goes down, and you make your money on Manara, and you feel good about yourself because this time around you saw, you analyze, you refined, and you use this, and you use it to increase your winning rates. And do you know the good thing again about it? Even if this goes to a loss, there's no way you have 2 trades or 3 trades in a day using this Manara and this strategy, and you will not win at least 2 out of them. So what does that mean? That means if this gives you minimum win rate of 1 to 3, which means when you put $1, you get $3. When you put $2, you get $6. When you put $10, you get $30. So if you lose 1 trade out of 3 and you win 2, which means you've lost $10 and you have made $60. Which means at the end of the aggregate, you're making, when you look at the aggregation, you're making like $50 a day. That's not
Mm.
all. That's not all. What if you lose 2 out of the 3 trades? Fine, you lose $20, and then when you win 30, you still make $10. Do you get my point? It
Yes, sir.
increases your win rate. It increases your win rate. That is for sure. It gives you rest of mind, and it allows you to calculate your risk. Do you get my point? So
Absolutely.
so so this uh um sorry, 1 minute. 1 minute. Sorry guys, I have some little noise from where so I had to just let's the dispute, sir. Sorry. 1 minute,
Okay.
guys. Yeah.
All right.
So I was saying something. I was talking about the reason why this is a very good thing. So you can have trades because the problem people have is this. Let me tell you the truth. Problem. The problem is people overtrade. Why do they overtrade? To make more money. But in the end, the longer you stay in the market, the more money you lose. And a trade that does not come with a trading plan is nonsense. No matter even if you make money, it's still nonsense because we're trying to develop a habit. That's how you win in trading. It's not really the best strategy. It's when you develop a habit of consistency, knowing what you want, having your trading plan. With this, you can have a trading plan. For example, let me give an instance. You can wake up today and said, today I'm going to trade. My rules for today is I'm only going to be risking depending on your amount anyway. If your amount is huge, you can say 1%. But if you know that you're using like $100, $200, anything below 1,000 or 1,000 below, you can use 3%. Okay. But for me, for anything 1,000 below, I use 4%, 5%. But it depends on your own tolerance for losses. Okay. So let's say you use 3% for 1,000. Okay. That means $30. Now I'm going to trade today. I'll use $30. Okay. For every risk I want to take. But I'm looking at making at least 10% of my capital, which means $100, at least 10% of my capital, $100. So what does that mean? That means if I'm using $30 in a trade, and minimum of any trade like this gives me minimum of 3 times. Look at this now, giving you 4 times. If you win this trade now, that's 4 times 3, $120. You've already done for the day. You should be done for the day. Look away. Be in control of your emotions and your psychology, and you follow your trading plan. Do it like a normal business. Now, sometimes when this thing is so sweet, you want to go again and again, and I mean that's the problem, right? But the only time for me, I'm giving you my trading plan indirectly. So I'll say I will take my trade today. I'm going to be risking $30. My target is $100. If I hit my first one, even if it's 1 to 3, most times if it's $90, it will have some fractions on it, close to $100. I will still stop. I won't, because of the remaining $6 or $5. Not going to a trade that will take 50 again. No, I will stop. Do you get my point? Now,
Yes.
if I lose the first trade, that's the only reason I will take the next trade. So I only take 2 trades a day. If only I lose the first one, hoping that the second one will give me what I want. Because why? If I lose the first one, $30 gone. The second one will give me $90 if I win. For example, I'm still good with $60. I'll be done for the day. That's how to actually move progressively. But you can't do that when you are in a mix of, hey, buy this, buy that now, buy that now, no, no, leverage well, no stop loss, no this. Now, I'm not castigating, I'm just saying, you know,
Yeah, sure. But that's the
I
truth.
mean, it's really, really stressful for me. I mean, it could be working for others. I mean, stressful. And for me, it's not something you can really rely on in terms of having a trading plan and having a financial goal. That is why
Mm.
I trust Manara a lot, and I like to use things like that. I mean, it's better you study Manara and how to maximize Manara better. I'm not saying you should not take signals. You can still take signal if you have another account, a smaller account or something. But this is a piece, it gives you peace of mind. Now, so to cut the long story, I don't want to spend much time on that. Okay. Now we've seen an example of what I'm saying. So what we want to do now is quickly let's try and see the past trades on Manara. Let's look at some past trades on Manara. Okay.
Mhm.
For example, for me to do that now, I have to change the status to complete trades. From complete trade, I will see the ones that are successful, the ones that are not. So to do that, let me slant. So we'll try the successful ones first and see if this really worked out. For example, okay, I'll change the status now. Successful. Now let's be having some of them. Okay, June 4. We have to go to June 4. It's no problem. We'll try and take like 2 of successful one and maybe 2 of non-successful one, depending on the time. Of course, the time is already gone, but I mean, I'm doing this because of the Eastern people. Like Rita, she's in Uganda, and by now they're already 12 midnight. So I'm sorry, Rita, but it's all for good, right? All right. Let's go to USD card. Yeah, I'm sorry. USD card. Oh, is it USD card? I saw June now. I saw something like June. Let's look at June. So I won't go too far. Okay. We have June, odd card, AED card for 1 hour, successful trade. So let's go to this one. We're going to be looking at it on the chart and see if this really helped out or not. Okay. So if you look at this one, odd card on what again? June 6th. So I'll look for odd card on June 6th. I didn't check the time. Let me go check the time again. Okay, I think the time is somewhere around there too. Okay, let me slant it and check the time. I forgot to check the time. June 6th. So this was June 6th. This was 2 a.m. Do you notice that anything AUD, they always happen around this time very well, 2 a.m., because it clashes with their time over there. If you look at 2 a.m., our time, this 2 a.m. Nigerian time, which is +1, and that will be uh that'll be 5, no, that'll be 4 a.m. Ugandan time. Now, this AM, if you check it on your clock to check Sydney, you see that it's actually their own working hours. Okay? All right, but that's not the point now. I mean, that point has been made already. Several. So we'll go to successful. So 2 a.m. June 6, 2024. We want to check what happened there for 1 hour time frame. So let's look at the entry. Entry is 91.38. 91.38. Stop loss 91.47. In case I forget, please. Let's look for odd card. AUD card, where you at? AUD card, AUD card, AUD card, AUD card, AUD card. Don't worry, you can always watch this video as well for refresher. I'm gonna send out the link. Hopefully, actually, I'll even send out I'll put it on the YouTube, so it will be easier also. All right, we're looking for June 6th, 6th of June. So I'm gonna use my vertical line to look for these dates. 1 hour. Let me put that 1 hour first of all. 1 hour, so you can be faster. Oh, sorry, that guys. That line you're seeing there, I put it there on purpose. It's like this dotted line tells me that's like at the end of each day. So every demarcation you see here means the beginning of a new day. The beginning of a new day. So that's I did that on purpose for my. All right, we're looking at June. So we're still on the 12th. So we have to go backward. Okay, 7th. So this is 6th of June. So 6th of June. We are looking at 2 a.m. This is 1 p.m. AM, 4, 2 a.m. Good. So this trade was called around this time for a sell. It was called around this time. So the entry is again, can remember the entry 91, 38,
9138.
and 9147. Okay, good. So 9138. Come to the coordinates 9138. That's for the entry. Is that the entry, right? Am I right about this one?
Yes, 9138 entry.
Okay, 9138. Okay.
Stop loss
Okay,
9148.
9138. Okay, 9138, 9138, 9138. And then the stop loss is 9147.
9147, yeah.
9147. 9147. Another good thing about this strategy is this. Let me use it for a red. Another good thing about this strategy is it will help you to know where to enter your trade, so you won't miss out and you will not enter wrongly. Okay. What else again? Okay, the TP, the TP, the TP is the TP is 1998, but the market surpassed that area anyway. Market passed that area, so but let's just say 1998, 9098. That's 9098. So I'll use green for this one. All right. So let's look at it. This trade was called 2 a.m. Now, do you see what just happened? Now, when Manara gives you idea, remember, guys, there are two entries. There are always two entries. Remember, there are always two entries. The first entry is anytime you see this gray box. Manara is telling you that you can enter at this point, or you can enter at the main entry here. So this is entry one, entry two. So how do you do that? According to Manara, what Manara is saying to do is you put your line here at this box. That's 9131. That's the first entry. And the second one is 9138. Now, for those of you who take Manara from the Telegram, the one that sends to you automatically, you see that always come with entries like this, two entries. So that's the other entry is this one that you see around this gray box. So this particular trade did not get to the main entry, which a lot of people would have said their trade at that entry, but it got to the first entry, which is the one before the 9138. And those many people would have missed this trade. But because you are using this style, so what style are you using now? Now, remember, you only take this trade when you see, oh, I'm making so mistake, sorry. But anyway, we've already gotten what we want here. So now, Manana has given the trade idea. But you are what? you are a liquidity trader, remember, and you target fair value gap as well. Now, if you are going to see this, if you want to look at this, where is the liquidity here? The first liquidity is this area. Look at this area here. Let me show it for you. Let me show it to you. Look at the market came here and went down. So this place, money deposited here became a liquidity, right?
Mm-hmm.
Can you guys see that is a liquidity, right?
Yes.
So you as a liquidity trader, you'll be watching out for market to take this liquidity out. And how does market take a liquidity out? By coming, see what happened here. Look at the
Slightly
market
above
came
it.
here, slightly above it. Look at the wick. It touched it,
Mm.
took the liquidity out, and made its way down. Market doesn't care about you. Even if you put your entry here, market is only coming for the liquidity. The only reason
Yeah.
why your entry can be picked is if the market decides to go further to take more of the probably the ones in the past. Maybe there's another one that is higher than this a bit. But market always go to the closest liquidity. But if you look at it, there's no one that is higher that is even closer. Do you see it now? So the higher one,
Yeah.
because even this one that you see here that I was taking here, took the one here before. Look at this one before was the higher. This one here at 2 a.m. came to take it and then came down. Do you see it now?
Yes.
Now, remember also, I said another thing. I said, if you're going to take this trade, always set your TP at the next liquidity, right?
Yes.
Manara TP was here. The next liquidity was here. Now, the next thing we want to look out for is our type of entry. You know, even you, the moment this happens, you don't take the trade immediately. You look out for a reversal and fair value gap on the
Favor
lower
leader.
time frame, right?
Oh.
So
Yeah.
this market was taken out here. Good. So let's mark out the liquidity that was taken out first of all. So we'll know because we're going to go to lower time frame now. We need to know where all these things are happening so we'll not miss it. So the market took out from here, took this liquidity here. The moment this happens, what do? You don't take the trade yet because you've seen this mark go up like this and come below it. The moment it goes up like this and they later close below it, this particular can close below this area, which means it doesn't want to go further. So it has taken what it wants to take. You now go to a smaller time frame. Now I'll give you a style. Okay, I'll give you what they call um uh I think I'll just give it a name. It doesn't really have a name, but I could call it uh alignment of a higher time frame and lower time frame. That's kind of lower time frame and higher time frame you use. For example, now if you are on 15 minutes, it's good to go for 1 minute. If you are on 1 hour, it's good to go on 5 minutes for your lower time frame. Do you get the point? If you're on
Yes.
4 hour, it's good to go on 15 minutes. If you're on daily, it's good to go on 1 hour for your lower time frame. So for every higher time frame, there's a corresponding lower time frame.
Okay.
Let me repeat that. For a daily candle, your lower time frame for that will be 1 hour. For a 4 hour candle, your lower time frame for entry will be 15 minutes. For a 1 hour time frame, your lower time frame will be 5 minutes. For a 15 minutes time frame, your lower time frame will be 1 minute. Some will use 3 minutes, but you can use between 1 and 3. But do you know why you use lower time frame? It helps reduce your stop loss and gives you more reward for money. Do you
Sniper.
get
Yeah.
it? Helps,
Yes.
yes, precision, gives a precision, like a very precise trade. So now you see why I ask you to watch all those videos because imagine a newbie that I've not watched all those videos. I'll be speaking jargons like these are jargons you will never understand, and I don't want to go
Yeah.
into forex. So now, what are we going to do now? We've marked out. First of all, we marked out our liquidity area here. Okay, I'll call this place liquidity graph. Let me give you the text so we can see liquidity. Um, let me just liquidity graph. Yeah, liquidity graph here. The graph happened already. Sorry, graph. Yeah. I'll put it in the center bottom. Let me put it at the top here. Okay, liquidity grab has happened. So I'm going to a lower time frame now. In order to quickly recognize or see this one when I go to a lower time frame because it's not this. I didn't it's correct. I didn't mean it's the correct date. It will have been easy to locate, right? So I'll just circle this side so we can know where this is. But it won't be this difficult for you because it will be in real time when you are doing yours, right? We are going backward to check what has happened in the past this time around. Right? So I'm on 5 minutes now in order to see. Okay, you see, we are there. Now, you now, You've moved to 5 minutes. What are you looking for? The first thing you're looking for is you want to see this. First one, you know that this thing has been making a higher, what do you call it now? A higher, what do you call it? An uptrend, right? But you are looking for a sell. Now this is a liquidity grab area. So you see here, low, lower low, sorry, higher low, higher high, higher low,
Right.
higher high. Now, which means this was the last higher low here, right? This area here. Look at it now.
Yeah.
Higher low, higher high, higher low, higher high, higher low, higher high, right?
Mm-hmm.
So the last low here, guys, the last low was this one. Put your line here also. I mean, you don't have to put your line. I'm just doing this so to let you know why I'm taking my decision. So normally, if this thing is still an uptrend, right? If it's still an uptrend, oh my God, I don't want to shift anything wrongly now. If it's still an uptrend, we're expecting the market to take it to go this way, to go higher, right?
Mm-hmm.
But this time around, the market came and go lower than the previous low. The moment it goes lower than the previous low, what does it become? It has become the lower low. Lower low because this low now is lower than this previous low.
Low.
So
Yeah.
you know as a trader that is looking for a reversal, the only time you take your action is when you see any candle that closes below this line that I just put here. This line here now, this line. Eh? Any candle that closes below it. And what is the candle that closes below this? Let's widen it so you can see. You see that this candle, this black candle here, was the last candle that crossed it and closed below it. Now, the moment there's a candle closing below this line, even if it's just this small, this is a place where you call market structure shift or change of character. So this is the end of where the whole thing happens. So it means from here now to this place is your impulse, is where you look for your fair value gap. Do you get the point now?
Yeah.
Now, even if you don't see fair value gap here, you can still look further here. But here now, if you look, let's look whether there's fair value gap here. Remember, this thing has happened in the past. So you know that. So you have to be careful. I can delete this big box now because we already see what one sees. So let's look at it. Can you see any spot, any fair value gap? Yes, guys. Look at the first fair value gap here.
Yes.
The first fair value gap is here. Between, if you count this first candle, second candle, third candle, there's a space between this first candle and the third candle. Is there any other one? Yes, of course. There is still also, there's a space between this candle and this candle, fair value gap. Is there another one? Yes, there's a space between this candle. If you count this blue candle here, let me bring my pointer again. This blue candle, this black candle that's so long, displacement, and this blue candle. There's also what? A space between
Fair value gap.
This one, which is a fair value gap. And I'll prove something to you guys. Now, remember the law, the rule that I gave that guy at that time. I said, when you have an impulse like this, you know, you measure from here. You are looking for fair value gap, right? You measure from this place, the beginning of the impulse to the end of this impulse, right? With your Fibonacci to know which fair value gap you should go for, isn't it?
Yeah.
Sorry, I mean from here. It's from here to this place. You know, this is the part. This is the last low, right? So it went up. Remember, this is the last low, right? Here is the last low. Are you there? So it went up. In fact, guys, let's pay attention. There's another thing that you need to see here. The first value gap. In fact, there are more fair value gaps at the top here. So there's another one here and here. Do you see it now? Remember, this one is assumed to be one impulse. Look at this thing you see here. It started from here. It's supposed to go up, right? And what happened? It broke and came down. It broke this one. So the structure started from here to this point, right? So reversal came from this side. So what you do is the first, okay. Sorry, I'm confusing you guys. Don't let me be the confusion now. Confusion is sorry. So here now, this value gap will not count. It won't count because this market has not crossed this line.
Structure. Yeah.
Yes. At this time, all these ones are not crossed here. So long it hasn't crossed here, it came here, which is the same level as this other one, and went up. And at that time, it's none of your business that time. At the minute it has crossed a bit before going up, you now go and target this one as a fair value gap. Do you get what I'm saying now? So
Sure.
that's not so this your business started from the one that crossed, which is this area. This area
Yeah.
that crossed. Do you get, guys? So sorry, I
Sure.
was confused, you guys here. So your import started from here to this place. Now, so let's look at. So you bring your Fibonacci. I'm sorry, guys. I'm sorry. I almost confused you. So the Fibonacci, remember, is a cell. We're looking for a cell, which is we are looking for a downward trend. So your Fibonacci must come from the top down. Because now, since you have multiple fair value gap, and now you have your 50% around here. So what do? You look for fair value gap that is above the 50%, from the 50% level and above, and which is this one, which is the one that we circled. We put the box, this one that we chose here. Remember? Can you see it? And what
Yes.
happened now? So what does that mean to you? To you now, trading Manara? What did I say you should do? You put your
You
short
put your
to
entry.
your entry will be here. Let me make it large. No, before I make it large, your entry will be here. Okay. I said your entry should
Yes.
always be where, and your stop loss will be above beginning of the
Above that,
impulse, which is
the
Abi,
impulse. Yes.
and your entry is exactly within that fair value gap, the middle of the fair value gap, right?
Yes.
And your target, though Manara said this green area is your TP2, but you should always target the nearest liquidity, which is this one. Now, guys, look at what has happened. Imagine you knew this before this day. You knew this idea that I just gave you before this day, and you saw this Manara trade on that 1 hour, and you did this. Do you know what you'll have made? Can you see? Your stop loss will have been 3.1, while your profit will have been 26.6 pips, which means that would have been 8.5 times, or variably 8.6 times whatever you put in. So which means if you had used $10, you would have made $85, 80 cents. If you had used $100, you would have made $800. 858. Yeah, that's $858. Do you see it now, guys? On one setup. I hope you understand what I'm saying. On one setup.
Absolutely.
Now, if your target for somebody who is using, let's say somebody who is trading with $30 on the 1,000, that means if you are trading $30 on the 1,000, where's my calculator? That means your $30 is what you traded with. You'll be making 8.5 times. You would have made $255, which is 200. That's 25% of what you target. Your target was 10% for the day. Now you've made 25%. Do you know how good this is? This means even if you are trading tomorrow, you lose your first trade, you are still ahead.
Yes.
Hope you get my point, right? So you see that if you are using Manara directly, you would have missed this trade. But if you're looking at this Manara using these refinements that I'm just teaching to you now, you will not just enjoy this trade. I mean, it was a sniper trade. It didn't even come up like give you all this drawdown. You know what I mean? Your stop loss is safe. Yet it came down and gave you what you wanted. And it took out all the liquidity all the way down. Market always go to area of liquidity, like I said. Let's go to a higher time frame to see where it actually made, why it went this low. You see, it came for this liquidity here. That's what it came to take. And what happened after that? For you to believe, I want you to see that liquidity really, really works, right? But to be safe, it's always good to target the nearest liquidity, because sometimes you may take only that one and go up, then later come down for this one. Now look at it, came for this liquidity down here. After taking it, what happens? It grabbed enough power. What did he do later after that?
Yeah.
It went up.
You
see it? Reversed and took this liquidity and did not stop there. For you to see it come this way, then if you look backward, there must be liquidity around that area that it came for in the past.
It came for.
You understand? All this liquidity in the past, there must be a liquidity. If you go to a higher time frame now, the liquidity that it came for. So guys, let's take one more, a losing trade now. Let's take a losing trade. Okay? Let's take a losing trade. Remember, we didn't cherry pick this. These are like random, right? These are random trades.
Yes. Yes.
So you can go back and do your own back test on the successful ones and all that. So let's look at failed trades, failed ones now. So I'll do the same thing we did before, but also remember there's nothing like 100%. We just
Mm-hmm.
need. Are you telling me there's no failed trade? Man, no, Manara did well then. There are failed trades now. What are we talking about? So let's look at this one. I'm looking for a recent one. Thank God, this is June 14, right? So let's
Yeah.
look at this NZD USD. Now it was a failure according to Manara. So let's look at it. June 14, 1600 is 4 p.m. So let's look for 4 p.m. June 14, right? 4 p.m. But before then, let's look at the entries and the stop loss, blah 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 blah. Okay. There you see. Okay, guys. So we have the what's the pair? NZD USD. Let's go look for that first of all. NZD USD. What time frame is this? 5 minutes. 5 minutes. NZD USD. Okay, let me go for the pair first. NZD USD. Guys, I hope you're not tired. Are you feeling bored?
Oh, no, no, no. I'm following. I believe we are following.
Okay. I know Rita is already sleeping.
I don't think so.
Yeah.
I just want to hear her voice to know that all right. I know I'm pulling your legs, yeah. So
I'm here. I'm
so
here.
now all right, so yeah, that's a good one, Rita. I like your determination. All right, so on the 5th, on the 14th, right? On the 14th of June, 4 p.m. That's the time I use there. 5 minutes is sell. So let me look for that. Where's my bar? 14th of June. Okay, June 14th was recent at 4 p.m. 4 p.m. 4 p.m. 4 p.m. No. 4 p.m. Good. All right, Manara called this trade around this time for a sell. So let's look for the entry. What's the entry? Six. Okay, the entry is 13624. Am I right? Okay, 613624. That's 0 point. Yeah, 613624. 613624. 613624. 613624. 613624. I use a gray line. Yeah. No, not gray line. Sorry, I used a very faint blue. So that's the entry. The stop loss was the stop loss 614. Sorry, 614. So what we're looking out for here is assuming you know what you know now, then would you have taken this trade? Or even if you take this trade, would it be a win for you or a loss? Let's just see. I mean, no guarantees, but at least target two is 612325, 612325, 612325, 612325, 612325, 612325, 612325, 612325. Shit. All right. So it's a 5 minute trade. Fine. So we're gonna be backing up to like 1 minute. So let's look at this. Now you, as someone who trades, like this trade was called. Remember, you don't take any trade unless, first of all, want to see when this trade was called, you want to look backward. Yes, there's a liquidity here, but the problem is, you see why you will not even take this trade. First of all, look at the last liquidity, the recent liquidity area. Not to even talk about the highest one. Let's talk about the lowest, the recent one, the one that is closed. This was the recent liquidity area.
Mm-hmm.
Now, even before then, before we go to that, let's check, is this even okay? Yeah, it's a downtrend trade. Fine. So it's a downtrend trade. So the recent liquidity area, which is this was a lower low, lower high. So this is a lower low, right? So
Mm-hmm.
the market, so Manara expect this market to come to somewhere around here, which is where the entry is. Look at the blue line. Because normally the last low is not supposed to be bigger than the previous one, right?
Yeah, yeah.
But now you, as a liquidity trader and somebody who understands change of character, remember, you now know these things. And you don't enter a trade unless you see these things. Number one, you want to see the market make a move of change of character in your direction. You are looking for a sell. So you're looking for a change of character downwards, not upward. So since it's a higher, a lower, lower low, lower high, lower low, you are looking for a change of you're looking for a market that will go up, give you this vibe of now this is a like what do you call it? This is a lower low, right? This is a lower low, but now this is supposed to be a higher high because higher than this last high. So you're looking for another one here. Then you another one here. Then you want the one that will come and cross this one downwards, right? To give you a shift. But right now, Manara has given the trade, and this trade went up. So imagine people who take it as pending order, like Manara has given a trade, they go and set it down, put their entry and stop loss. It goes there to hit their stop loss. But you can't be that because you don't take your trade until you see what you're looking for. You don't set the pending order. You wait for a reaction to happen. The first reaction you want to see is you want the market to come to your entry. So did it come to your entry? Yes, this is the entry. It has come to the entry. But what you are looking for now, you see that there's a liquidity here. The last liquidity is here. So you now, you know that the market need to take this one out first. So you wait. So the market has taken it out. Do you get my point now?
Yes.
The market has taken it out here. It took it out here, this area. Because remember when I draw, let me even draw that thing again for you. So the last liquidity was here. This one I see here. So you bring that line again here. So the market took it out around where? Around the same stop loss. This is why you would have known that this, like me, if I see this after seeing this trade, I will know that this trade is going to be a disaster for those who put the pen on that because the stop loss is around the last liquidity. Which, if you know, is that so? You know that of course it will take it out before coming down. It needs to take that money first. So you won't be a victim. You will now be waiting again. Now what are you waiting for? That's taking it out. You now go to a lower time frame to look for what's it called? You go to a lower time frame to look for a shift, a market structure shift. So you go to 1 minute. Somebody like me, I won't even take the trade again so long as destroyed Manara pattern. And I will advise the same for you. Do you get what I'm saying? So long it hits Manara stop loss before you see what you're looking for. Always avoid it. But let's look at this. So now you're now in the lower time frame. What you want to see again is you want to see a market structure shift, right? So what was the lowest? What was the recent low? The real recent low. The real recent low. If we're going to look at it at the lower time frame, for me, I'll say, let me use this one so you understand. Look at it. I'll say here, a low, a high, a low, a high, a low, a high, a low, a high, and then here. So I'm looking for anything that will pass this area. That will pass this area. This is the last low before it went up like this, right? It made this low. So here now you're starting to go high. You understand? So this is the last low, major low that you use here. You're waiting for a break of structure. Sorry, I say break of structure, change of character.
Change of character.
Assuming you will take this trade. So the change of character happened here. It happened here from this point here to this point because this is where it happened. So this is the impulse that made it happen. From here to here, crossed this line, right?
Yeah.
Now, the next thing you want to see is you want to look for your fair value gap. Now, there's a fair value gap here. There's one here. Look at it from here to this place, right?
Yes.
And there's one from here, between here and this place. And then I think those are the two that we have. So using that same strategy that we used before, we bring the Fibonacci to, at least, if not for anything, learning that this strategy would have helped you to avoid losing in this trade at all. I mean, that's a good feeling. Now look at it. The 50% is here, right? Now, this is 50%. So any fair value gap above that is okay, is valid, right? Sure. So let's see, is there a fair value gap around there? Yes.
Yes.
Look at that one that I said from here. No, not from there. From here to this point. From here to this point. So
Yeah.
if you look at it now, the market came for this one to this point. It took this one, came here, and then it made its way down. So even if you are going to take this trade, see what would have happened. If I were to be the one, anyways, I always have targets. You know, see what would have happened. Let me hope you can see what is it, fair value gap I'm talking about, right?
Yes. Mm-hmm.
Let me draw the rectangle so you see it. So between this blue and the black here. So which means now as usual, you make your entry here, short position. You make your entry at the middle of that, and then of course you move your stop loss to somewhere like this, and then you target the next closer liquidity. You know, you are not respecting Manara anymore. Now Manara is gone because it's been taken out. So if I were you, what you would do is, okay, yeah, this body, just give it like this. So what you would do is hybrid is better than none. You target the next lowest liquidity. And where is that? This is the nearest lowest liquidity.
Yeah.
Look at it here. You know, this is another quality, right?
Yeah, I can see.
So the lowest liquidity, you always look for the nearest liquidity. That other one, we target the nearest liquidity. Yeah, because after this liquidity, another one that is near is the one that Manara
Far
gave
down.
around
Mm.
far down here. But because Manara has already lost the trade, so you are alone now, no backup. So just target the lowest or the shortest one, yeah. Because even there's another one there. I think there's another one here too. There's another one here. Sorry. You can even target this one as well. Because me, I like minimum of at least 1 to 2. If I'm taking any trade, at least always 1 to 2. See, let me first point it out. Can you see that there's liquidity here? This one.
Yes. Yes.
There's this
Yes.
one. So let's even look at this one. Anything that will give me at least minimum of 1 to 2, always target that. Anything that will give you minimum of 1 to 2. I learned that from one guy like that. That guy is so rich. I mean, that guy is so rich. That guy is always doing 1 to 2, no matter how good the market is. The guy will say 1 to 2 is out, and he does only 1 to 2 a day. I mean, if you look at it, it makes sense. I mean, these guys are the ones they trade. What's it called? They trade. They are big. They started small. Well, in a day, it makes $6,000, $7,000, and all that. All
Wow.
right. So if you look at this one, yeah, if you look at this one, this is another liquidity, but the market did not go for that one. They went for the closest one. I always tell you that always look for the nearest one, right? This is the first one. The nearest, the second one is this. But for me, I like to look for two. The one that will give me at least 1 to 2. So let's see. I think you see, I would have gone for this because it's giving me 2.68 of my money, right? I would have gone for this or look for the exact 2. Either way, at least this will give me 2. So what I'm trying to say in a sense is this: you now being careful, even if you want to stay on this one, just like let me just play safe. Others have lost from this trade. I want to make money from this trade. Even if it's that one, it's still okay. Even if you go for this 2, you're still in between. Look at it. So what do we have? 2, right? 1 to 2, 1 to 2, 1 to 2, 1 to 2, 1 to 2. This is let's say 1 to 2. It came there. Look at it. And it was a good entry because it didn't go for your stop loss at all. I mean, look at this. This is your stop loss area, right? From here to here. Look at where it got to. It just tapped it, sniper trade down, came down, hit your profit. That's which means took this other liquidity. What just happened here, guys? Let me tell you. The market had made a reversal here. The market made a reversal here. It was a downtrend before, but when it got here, it started making a reversal. But you now with this strategy would have made at least something out of this. Following the rules, I always say target the nearest liquidity. Would have made 1.5. So which means if you had used $10, you would have made $15. That's a good money because for you to use $10, meaning you are using like $100 to trade or so. So if you have $15 on this trade, you are not losing. You are ahead. But they lost because they didn't follow the rules. Now, why are we here? We are not here just talk about making money. I mean, we're looking for the failed one and see that if you apply our own strategy, are we going to?
Yeah.
You understand? Are we going to be like one of the victims? Would that be one of the victims?
Yes. That's
because
right.
this would have seen it that, oh, this is not good for us. They would have avoided it and go for the next one. Remember, Manara gives you choices. That's why you have plenty trade. You would have chosen this one. You would have gone to choose the one that, I mean, you look for the next one, till you see the one that fits in. Now,
Mm.
what happens if you take the one that fits into all your criteria, knowing fully that you're not impatient? Because sometimes we want to just take trade by all means, we ignore the rules. So at least one of them is let me just manage. If you lose that, that's on you. But the best part, let me tell you, the best learning, the best loss is the loss that comes after you've done everything right. You know why? You see, when you lose because you didn't do things right, you've lost money, you've lost knowledge. You're not learning anything because you avoided doing things right. So you lost because of that. So you're not learning any new thing. You're only being stubborn and being punished for being stubborn. Waste of money. So you're paying money to be tortured for being stubborn. But if you do everything right and you lost the trade, or you lose the trade, sorry, you lose the trade, you is a good thing. You've learned a new lesson. You now look at what is the new thing that happened outside these rules. That will help you
Mm-hmm.
to improve next time, to add more things, new things. It's new because it is outside the scope of your own terrain.
Knowledge, yeah.
But not that when you know something is wrong, you just let me just manage it. Even if it's small money, let me make. I mean, that's stupidity. You're wasting the money. You're not learning any lesson. So, guys, I think at this point, I'm going to stop this trading. If you have any question, ask on the group because we're going to like 2 hours now, and it's a recorded stuff. I don't want it to be too long, but it's already long. But I think it's interesting. It's something that you
Yes,
like to watch, isn't it? So if you have questions,
absolutely.
ask on the group, okay? But best thing is you start practicing this as soon as the market opens. Or another thing you can do is back test. While
Yes.
we're on holiday now, you can back test. Keep going. What I just did now, go and do it on other pairs. It helps you.
Mm.
See, let me tell you, the best way to learn in Forex is as soon as you learn it, go to your chart and do that same thing to stick. But when you just assume and leave it like that, it goes off. All right, guys. So please send your question to the group. I hope you had a wonderful time. And I want you to
Thank you
have a very
so
good night.
much.
All right.
Thank you so much for your time. God bless you.
You're welcome. You're welcome. All
Thank
right.
you very much. Thank you.
All right, guys. Oh, we're even five. Wow, awesome. I didn't know that we're up to five, huh? All right.
Yeah,
So
it's
meaning
a full
Josh,
house.
okay, Josh, you joined from the UK. Who is Zoom user?
I'm
I
the
know
one,
it's
sir.
Jay. Okay, who is Jay? Another Jay. I mean, I know this Jay. That's John. Who else is Jay? The
Yes,
Jay. Okay, that's
The letter
Josh.
J. Okay.
The letter J is Josh. Okay, that's Josh from the
yeah,
UK.
Josh.
Rita from Uganda, and Victor from the sea because I don't know which sea you are now, Mediterranean or India or the ocean. All right, guys, nice having time. So please, I'll send this video to the group. Okay. Good night,
Thank you so
guys.
much. All right.
All right,
God
you're
bless
welcome.
you.
Bye.
Thank you very